Hello everyone. Today we will discuss very important topic, which is the biggest trading mistakes that day traders are making again and again, over and over again. So let's get started with the first one, because we will discuss 5 points and all of them are very important. So let's move on. The first one is paper trading. As all of you know, everybody recommends paper trading, so do I, but paper trading is not even close to a real trading. On paper trading, you can act with your brain, but when it comes to real money, your emotions will enter the field and fight against you. What does it mean? It means that when you go with the 1000 shares on the paper trading, when you see a red line, you doesn't care. Why? Because it's not even a real money. It's not your money and it's not real money. So if you lose it, it's totally fine. You can reset your account. But in the real money account, all things are changed. Because when you go with the 1000 shares again and when you see a red line, your hands will start shaking and you will start to think that what if this stock goes to zero, or am I going to blow my account, and so on. So paper trading is not a bad, but it's good for learn your broker interface and gain some market screen time, and that's it. So when it comes to real trading, start with small positions. Okay, so let's continue with the second one. Not having a plan. So don't be a bag holder and don't buy the stocks that you don't want to own. So let me give you an example. For example, a Peloton, right? So Peloton is a nice company, but I don't want to hold it forever. But I got in a position and it keeps dropping, and now you can call me a bag holder. So be sure that think before you press the buy button. You really want to own this stock for life, or you want to keep this stock? Is it a good company? Think those things. Don't go in for FOMO, because many beginners jump in the hot stocks due to FOMO without knowing why they were buying, why the stock was running, nor their risk reward, and most important, exit plan. And so this is a very important thing, and you should be focusing to create a trading plan. So where you want to go in, and most important thing is your exit plan. Everyone's think and working on hours and days for enter a position, but nobody thinks for an exit plan. So think about exit plan first. And let's continue with the third one. And this is another very important one, is over trading. So let's say you lose, right? And you continue to chase the stock. It's not a good thing. So when you go in the trade, there is a 3 consequences you can face. First one is loss, and second, exit from the enterprise, right? And third one is making some profit. But the most important thing here, as I said before, don't chase the stock or don't force the position for profit. Just let it go. Just shut down your computer and don't trade over and over again to cover your losses or make some more profit. So over trading is not your friend. Okay? And let's continue with the fourth one, and again an important one, the scaling up. So this is a serious stuff. Why? Because you can make mistakes. You can make 100 trades and maybe 60 of them loss, but the most important thing is your size. So don't risk more than 2% maximum on your account size. So when you make your first $100, you got excited, right? And you want to go big sizes to get big profits. It's totally fine, because every day trader thinks like that. You are not alone. But there is a 90% chance you will lose that trade if you go big, simply because you are not psychologically ready for that sizes. As I said before, on the paper trading part, your hands will start get shaking when your order sizes goes big. So don't forget that. And the last one is, in nowadays I see a lot of new chat rooms, and these guys are so risky, right? So our last point is chat rooms. So do you want to be a profitable day trader? So you should stop following others, because you need to create a own trading plan and follow that plan. Instead of chat rooms, go check out tools like TradeX, and these tools are not saying you buy this or sell that, but they are good reference for you, that you can scan new stocks, you can see some breakups, or is there any good technical opportunity that you can enter the position, and so on. So you can use those kind of stuff. You can follow option flows, you can follow dark pools, and you can follow the big whales, but you should not get direct signals like buy from $100, sell from $105, and if it goes to the $90, you should stop, exit that trade. So these chat rooms are, it's not good for anybody, and you cannot improve yourself if you follow others. And in the end of the day, trust me that all the money that you will give to them will be your extra loss. So don't follow others. So that's all. There was 5 very important points. Feel free to ask me any questions, and thank you for watching. Don't forget to subscribe and like my video. See you soon.